Ryan Mack, welcome back to Trading Guys, and today I am going to smash out this week's fundamental review. As always, we're going to cover the news we got last week, which was NFP week, what we've got coming up this week, which is actually going to be a pretty spicy week because this is the week of US elections. Finally, that's why markets have been really shitty. Not solely, but it is part of the reason why markets have been pretty rangy and pretty shitty right money, and it's going up. You think, well, there's a trend, and then it's pulling back, and you're thinking, what the fuck's going on? You know, not a lot of things really make sense right now in the market. And that's totally fine, by the way. This happens. Markets are seasonal. Trading is seasonal. You will have months where weeks or months where it's just totally shit. You're coming to the screen every day. You can't see your setup. You can't see your strategy. And you're like, come on, what's happening? Fundamentally, everything's confusing. You know, things don't always align. You get conflicting information and you're like, what does that mean? Like, normally if it's like this and it's like that, it would be buys, but this is conflicting, you know, like, what does that actually mean? And it's perfectly normal. Markets do that, okay? Excuse the dress, I just came from an event and I literally straight in the door and wanted to smash this out because it's now 25 to 7 over here. Yeah, 6:45, sorry. And I want to get it smashed out so I can get prepped into bed for tomorrow. As always, guys, what we do is we grab our notebook and let me just go through. Sorry. There we go. Get a fresh page. At the top, we are going to write trades. Below that, we're going to write strong, weak, and then neutral, right? Again, I'm always repeating myself in each video, but like I say, I never know who's watching my videos for the first time, right? And you know, it's like, if you are watching this for the first time, I know you're not going to go back and watch last week's video because it's already out of date, right? Or the week before and the week before, because they're already out of date. So, look, the reason why we do this, look, strong, weak, and then neutral. I know logically you're probably saying to yourself, well, that doesn't make sense. Why wouldn't it be strong, neutral, and then weak, right? Because that, obviously, the gradient makes sense. The reason for it is you write down which economies are strong once we cover the news. Then you write down which ones are weak, which ones are neutral. At the end of it, you score out, you can score out or just ignore the ones that are neutral. And then you pair up a strong economy with a weak economy, i.e. a strong currency with a weak currency. And that's how you select your trades. If you're new to trading, or maybe you've been doing it for a year or two and you haven't really got into fundamentals, blah, blah, blah. Have you ever watched other traders, right? And you're like, how does he know that's a buy? Like, how does he know it's a buy and it's not a sell? Or how does he know it's a sell and it's not a buy? It's because of economics. It's because of fundamental data. All right, that's why it is. I'll give you an example of how it works. If you're a banker, right, and you've got a $5 billion account, your job as that banker / trader, you've to invest the bank's funds in a currency / economy, you know, if it's pound and GBP, and into a currency which is going to potentially give you the highest possible yields, the highest possible return, with the least amount of risk. There's always risk, right? You're never going to have zero risk. There's always risk, but your job as a trader is to select a pair and invest the money into the currency / country / economy, which is potentially going to give you the biggest returns with the least amount of risk. That is your job. So how do you do that as a banker? You look at economic data, you look at GDP, you look at CPI, you look at PPI, you look at PCE, you look at employment, unemployment, credit card purchases, average salaries, blah, blah, blah. You look at this. So if you, for example, if you're looking at GBP, right, and you look there, manufacturing is up, services is up, that's like PCI, etc. PCE is up, CPI is up, average earnings is up, employment is up, unemployment is down, you know, blah, blah, blah. And it's all, you're like, fucking hell, the British economy is super fucking strong right now. That's phenomenal. So you put that to the left-hand side, you know, of your imaginary whiteboard, if you like, right? And then you look at Japanese yen and it's like, fuck, average earnings are down, employment is down, unemployment is up, consumer spending is down, Manufacturing is below 50, so that's bearish, that's horrendous. Services is below 50, that's horrendous, that's bearish, blah, blah, blah. Interest rates are fucking 0.25, and all this. So that's fucking terrible, right? That's a fucking terrible economy. So you put that on the right-hand side of your imaginary whiteboard. Now, if you're a banker looking at all the facts in pound, all the facts in Japanese yen, Japanese yen is fucking horrific and pound is fucking amazing. So what does that tell you? That tells you that you are looking for buys on GJ. You're not looking for sells. Now you may then come over to the trading chart and you may look at GJ and you're like, well, that doesn't make sense because GJ is fucking melting right now. Of course it has to melt because it has to have pullbacks, right? The market has to pull back to areas of value. It can't just keep going up in a straight line. So what will happen is you just ignore it as it's coming down. You select your area of value, your area to enter, blah, blah, blah. There are ways to do that, which I've shown in the Discord. I think I've got it in other videos anyway. Anyway, that's how you would do it. And you just simply wait as it's pulling down because that's counter trend, right? You just want to ignore it. Don't be enticed with FOMO because normally that's their big candles because they want to hurry up and get it down there so they can then lump in, add to all their orders and then take it up gradually, right? And for the long game. So don't get enticed by FOMO and, I'm going to take this sell. Oh, no, I'm going to turn it into a buy. Oh, then I'm going to sell it from here to there. Fuck all that. Minimum amount of sales, but sniper shots, right? Quality over quantity. That's what you want to be looking for. Ask yourself this question, right? Do you honestly, can you look me in the eyes and tell me that a banker will go like that? Right? The minute this candle fucking breaks this imaginary line that I've just drawn here, I'm more than happy. When this candle breaks that, I'm more than happy to lump in $400 million in an order here. Are you, honestly, ask yourself that question. If you're a banker, you've got a $5 billion account, are you happy to open a fucking trade here worth $400 million? All because a candle has decided to pass a stupid fucking line that you drew on that page by yourself. The answer, of course, to that, unless you're an absolute fucking maniac, is no. You would not enter that trade, right? And neither does the bank. That's not how the fucking world works, right? So that's how it goes. And the thing is, you then ask yourself the question, if you wouldn't put $400 million in here, because you're like, yeah, well, just because it's past the stupid fucking line that I've just drawn 2 seconds ago on my page, then you have to ask yourself the second question, why would you risk it on your own $10,000 account or $5,000 account or even $1,000 account, whatever your account size is? You shouldn't, is the answer, right? You shouldn't be doing it because it's fucking retarded. And I done this for years, by the way. I'm not hating on anyone here. I done this bullshit for fucking years until someone slapped me and was like, shut the fuck up, Ryan. You need to learn, real fucking fundamentals. What makes the market go from here to here? What makes it go from here to here? That was the Bank of Japan intervention that made that happen. It wasn't a good economy. That was the Bank of Japan intervene that made that melt, And then this is the real direction here. So it's all these things, right? We're going to jump across now and we're going to cover the news. So without further ado, guys, I like to do one at a time, as you know, except from AUD, Chinese, UN Renminbi, and New Zealand. And it's because they're all very closely correlated to each other. That's why I do these three together. All right. Yes, last week. That's what I want to see. What's the date? Yes. Okay. So let's have a look. Sorry, my eyes are dry as hell, lads. What have we got? Leading index, sticky. AUD, CPI quarter on quarter is down. CPI year on year is down. Trim, the mean CPI quarter on quarter is down. ANZ business confidence, retail sales month on month is down. Yeah, it is. Yes, it is. Building approvals month on month is up. Import prices quarter on quarter, massively down. Private sector credit month on month, sticky, same. China manufacturing PMI has increased slightly, and this is very important to note. It has now went from 49.8, which is bearish. It was estimated to stay at 49.8, forecasted, but it's now reached 50.1. Now, remember this, anything below 50 means what? bearish. Anything above 50, literally, 50.0 and upwards is bullish, okay? So that's good. That's shown positive signs of coming back. They're not quite out the worst of it yet, but they are showing signs of coming back, right? Which is good. Non-manufacturing PMI is growing as well, 50.2. So that's too bullish. That's quite good. AUD PPI quarter on quarter. That's down. Now look, and I always mention this, like I said, I never know if someone's watching this for the first time. So don't look at this number here and say, oh, that's green. That must mean good. If you look at this, right, you're like, fuck, I don't even know what PPI means. Of course, you can click this folder here and it tells you what it means, right? So you don't have to memorize everything. I don't remember every single thing memorized. Sometimes I go, fuck, what is PPI again? Why is it important? Oh yeah, it's all here for you. You don't have to memorize it. So we've got PPI quarter on quarter. Now this is green, right? So you might just look at that and go, oh, it's green, that means good. No, it does not mean good. And this is a thing that I personally think Forex Factory trips a lot of people up here if they don't understand how to read it correctly, okay? So previously it was 1.0. Now it's 0.9, which is less. So it should be red. So why is it green? Well, it's green because it was forecasted to be 0.7, which is even worse, but it came in better than it was forecasted, right? So that's why it's shown green. But if you look at the previous, which is important, it's like, that's not actually good news. It's actually bad because it's decreasing, okay? So it's very important. Don't just look at the color being green and being, oh, that's good. And similarly, sometimes when you see it red, it's not always bad. It just means, the opposite, all right? I'm sure we'll have an example here that I'll show you during this. So China showing good numbers now, a positive increase. This is the first time in a long time, right? So you can't just take that and be like, right, everything's fucking great again. No, you have to. We need to continuously start to see, each week, each month growing numbers. But it is a very positive sign, okay? Now, why do we care? Because we don't trade Chinese yuan renminbi currency. We care because it's very closely correlated to the likes of AUD. Whenever China's manufacturing and everything goes up, they purchase all their goods, to aid in their manufacturing. Their steel, iron ore, nickel, tin, gold, silver, copper, blah, blah, blah. It all comes, about 80% of it comes from Australia. So it has a massive effect on Australia. So if China's doing really shit with manufacturing, guess who's not getting bulk orders from the mines? Australia. So guess what happens? Things start coming down. You start getting weakness in the Australian economy, blah, 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 because it is very mines orientated. Not the only thing, of course, but it is very, it is heavily. So that's why when China is doing well, Aussie does well. When China's doing bad, Aussie does bad. Okay. They are positively correlated, which means they move in alignment with each other. They go up, they go down together like this. USD and AUD, so United States and Australia, are negatively correlated, which means they move in polar opposites. When the USD is doing well, AUD will do bad. When USD is doing bad, AUD will also do well. But you need to, when you're in that scenario, you then need to obviously come back and check China and see if that's doing well. You know what I mean? And you have to piece it all together. Nothing's very black and white when doing fundamentals and trading. That's why a lot of people fuck off and don't bother. You really should be doing it, We don't like to do the hard work in trading, right? We want this easy money that all these online gurus fucking shows, which is a load of shit. There's no such thing. If it was easy money, everyone would be doing it, and none of you would be going to work tomorrow because it would be that fucking easy, right? And it's not easy. Moving on. So, yeah, AUD's not looking too good for me. Sorry, I didn't mean that. Filter AUDs. Let's see what we've got coming up this week. I've been monetary yeah, so we want to see if they're going to cut rates. I mean, they could cut rates because things are coming down. I don't know if they're going to, but they could. It is very possible. We want to see this cakes and services PMI. I don't know why it's a yellow folder. In my opinion, it should be red or minimum orange, but it is quite an important folder. This one right here. NZD employment change, yeah, unemployment rate, yeah, we want to see those for NZD. trade good balance, US dollar did blah blah blah, new loans, and for China we've got CPI and PPI, but that's going to come out on Saturday, okay? But we do want to see these for next week's review, right? So for now, guys, I am going to be putting AUD, in my opinion, as it's not looking well. Let me just go back to last week again just to double check it. Yeah, it's pretty shit. I'm going to put it as weak. You could argue that it's neutral, you know what I mean? But I'm going to put it as weak. That's my personal opinion. And NZD, I'm going to put as weak because that is shit. Obviously, the CNY, we don't mark that down, all right? Now, moving on. Now I'm going to start doing one each, okay? So last week, okay, sorry. GDP month on month is down. Manufacturing PMI is up. Okay, so that's a slightly better sign. But yeah, I mean, for me right now, it's still weak, right? The Canadian economy is still pretty dog shit. Let's see what it was the week before. Yeah, you know, one piece of good news is not enough to be like, oh, what a great economy. It's still dog shit, right? So I'm going to put that as weak, and then let's see what we've got coming up for next week. Trade bans, IVPMI, we want to see that. Government Council speaks. Employment change, we want to see that. Unemployment, yeah. So we've got some news this week we want to see. Remember, guys, markets are going to be fucking spicy this week with US elections. Okay, so please remember that. Don't be in any rush to jump into a trade. Sorry. Right, CHF last week. Let's see what we've got. Economic barometer. CPI month on month, crap. Retail sales year on year, crap. Manufacturing PMI, crap. Yeah, it's not. Again, CHF is probably the one that I always struggle with the most because it is a hard currency to feel out because it's all year round. It's very stable, right? It's never too high, it's never too low. It's why it's a safe haven currency. People move their money there when markets are everyone's unsure about what's going to happen in the US and blah blah blah. People put their money into Swiss franc because it's a kind of dead certain. If you like, I don't like to say that, but yeah, it's just one way to look at it. I'm gonna put it in neutral. The weird thing with it, right? Even though I'm putting it in neutral, it's strange. Like for context, if I was pairing pound CHF, then I would put right now at this point in time, I'd put pound stronger than it, right? So I'd be doing buys. I'd be looking for buys, and then if I was in like CHF Japanese yen, I'd be buying the Swiss franc over the yen, right? So yeah, you kind of need to be open-minded about it in that way. It's never very straight cut, right? Clear cut. I've put it in neutral. Some may say it's strong for various other reasons, and that's fine because trading is all just about our opinions, right? Our educated opinions. I'm just simply here showing you how to read these, and you can hopefully learn how to interpret it yourself. So, what have we got here? Euro, fucking hell, get loads. So, you see this being green, you think, oh, that's good. It's not good. Look, it was previously minus 20. Oh, wait, sorry, I'm talking absolutely shit. It is good. It was previously minus 21. They thought it was going to be minus 20. It's minus 18. It is good, sorry, because it's coming up from you. My bad. German prelim CPI month on month is increased. French consumer spending month on month has decreased. French flash GDP quarter on quarter has increased. Spanish flash CPI year on year has increased. Spanish flash GDP has it's the same. The reason why it's green is because they thought it was going to be less, and it's not. It's come in the same, so that's why it's green. It hasn't progressed, but it hasn't dropped either. Okay, so that's still positive news. German unemployment change 27k. That's not good. Italian prelim GDP quarter on quarter has dropped. German prelim GDP quarter on quarter has increased. Prelim flash GDP quarter on quarter has increased. General retail sales decreased, but they came in better than expected, right? So again, don't be thinking that that's green. Look, it's came in less, okay? It's because they thought it was going to go a minus 0.7 and it came to 1.2, so that's why it's green, okay? But it's still less than it previously was. French prelim CPI month on month is good. No, it's not good, but it's better than what it was. Monthly unemployment rate is the same. Core CPI flash estimate year on year is the same, better than expected, but it's still the same as the previous. CPI flash estimate year on year is better. Italian prelim. Okay, so Euros came fighting back. I had it as kind of weak last week, and it's kind of came fighting back. So let's see what it's got coming up for next week. Oh, this week, sorry. Yeah, we've got PMI. Yeah, we've got a lot of PMI numbers this week. PPI as well. Yeah. Unemployment. Yeah, so we've got some decent news. I'm going to put... let's see what the previous numbers are. Let's have a look here. See, they're all... It's like... They're all bearish previously. Bullish, bearish, 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 you know? Bullish, bullish, bearish, bullish, bullish. So it's really mixed data. Last week's numbers were good, but you don't just jump from week to week. Good week, good week. You know, there's a progression, there's a cycle. So you need to see more solid data. What did I have it down as last week? I had it as neutral. Yeah, okay. I'm gonna potentially keep it as neutral. However, at the same time, I'll be keeping that with a little pinch of salt. Because it will be strong against certain pairs, like for example, Euro Japanese yen. I'm going to be buying that, right? Euro is far stronger than Japanese yen, for example, and Canada, Canadian dollar. I would be buying Euro against Canadian dollar and stuff, you know what I mean? But I'm going to put it in neutral for now. This is a personal preference until I see some more solid information where it's not, look, it's not, you know, up, down, up, down, up, down, you know. There's a lot of bearish numbers here, and there is a lot of bullish numbers. So it's like, we call it mixed data. You can't really make a solid decision on it, in my personal opinion. Okay, so I've made Euro neutral. All right. Moving on to pound. Last week, what have we got? Last week was a big week for the pound because we had the speech, right? I don't know why it's not even showing up here. Autumn forecast statement. Yeah, I actually watched that live. I watched this as well. NPC member Breeden Speaks. I watched that live. So what have we got? Let's see. Short price index down. Money supply up. Mortgage approvals up. That's good. Net lending to individuals is decreased. So that's not as good. That's bad news. Nationwide HPI is down. Final manufacturing is down, and it's dropped from being bullish 50.3 to bearish 49.9. So that's not good. However, remember, bear in mind that the UK is not a manufacturing country. We are predominantly a services country, right? Every country has both manufacturing PMI and services PMI, but some countries are heavily based on manufacturing and they're not really services, but they have both, right? And some countries are heavily services, and you know, we're not really a manufacturing country. So the UK is not a manufacturing country. It's a services country. Same as France. France isn't really heavily manufacturing. They're mostly services. Germany, although it has services, they're mostly a manufacturing country. So you'd expect to see manufacturing higher in Germany and lower in France and the UK, you know, and services higher in the UK and France, but lower in Germany, you know, and so on and so forth. Same with Japan, right? China is a manufacturing country, so you'd expect to see services below 50 and blah, blah, blah. But of course, if they're above 50, then that's fantastic. So not really a good sign that we've went from bullish to bearish on that, okay? So we just need to bear that in mind. It doesn't just mean you don't jump from week to week. 1 week you're strong, 1 week you're weak. You need to combine everything in a big picture. It's like looking down a big jigsaw puzzle, right? And that's what makes it difficult, and it takes a bit of time to get used to. So let's have a look. What have we got this week? Final services PMI, I want to see that. Retail sales monitor year on year, we want to see that. Bond auction. Money into the construction PMI. We want to see that. That's really strong just now. Halifax HPI. We want to see that. BOE monetary policy. Yep. Official bank rate votes. We want to see if they're going to cut rates. So if all these numbers come in weak, we may get a cut rate. Look, they're forecasting there's a potential 25 base points rate cut. Okay, so we'll have to keep our eyes open for that this week as well. Okay, for me, for now, pound. I still think pound has a lot of strength to it. I don't think there's enough to kick it from strong downwards. So I'm going to be putting pound in as strong because it is fantastic. But we do need to see these numbers and monitor it right and see if they come in strong or weak again, and then we can adjust for the following weeks. Okay, moving on. Japan is absolutely fucked right now, guys. They are. Excuse me. This just does the work. Lower house, right? Let's see. Unemployment rate was less, so that's slightly positive. It's not much, but slightly positive. Consumer confidence is down. Prelim industrial production is up. Retail sales year on year is massively down. BOG policy rate, like it's 0.25. They keep talking about wanting to hike rates, right? Like put this up to 0.50, 0.75, blah blah blah. But you can't hike rates if all your numbers are down. If all your numbers are shit and you are at hike rates, your inflation, you're just gonna fucking skyrocket your inflation, and your economy is gonna be even more fucked, right? And it's hard to imagine the Japanese economy being even more fucked than what it currently is, because it is very fucked right now. Okay. So we want to see this. Yeah, I've got a lot of news that we want to see it. We've already seen it. Sorry, this was last week. Manufacturing PMI. Look, it's getting slightly better, but it's still below 50. So that's just because it's more than it was previously does not mean it's now bullish. No, it only becomes bullish when it's above 50. It's got a long way to go, guys. So yeah. Monetary base year on year. Yep, want to see that. Average cash earnings. We want to see that. Why that's important? If people are earning, this tells you if people are earning more money. If people are earning more money, then what do people do when they earn more money? They fucking spend more money, right? Because we like to buy more shit when we've got more money instead of saving it. So that is good for the economy, right? And it brings stuff up. So that's why you're like, why do we want to see average cash earnings? That's why. If it goes up, then that's good. People are making more money. If it goes down, it's not good. They're making less money, and therefore people are skint. They don't really have extra money to spend on stuff. So the economy dies because people aren't churning the economy out by buying clothes, going for beers, restaurants, blah blah blah. Household spending year on year, want to see that. So it's not looking good. And leading indicators. Yeah, so there's some news next week. Again, for me, Japanese yen is weak. It's going to take a lot to change that. Not even just change my mind on it. It's not really my opinion. Stevie Wonder can see that Japanese economy is fucked. Now, USD. Goods trade balance. Prelim wholesales inventories month on month. What we got? Down. Why is that good? -1. Why is that green? I don't understand why that's green. S&P Composite HPI is down. Don't be fooled that that's green. It's only green because it came in higher than expected. But it was previously 5.5, now it's 5.2, so that's not good, okay? HPI month on month is up, so that's good. Consumer confidence is really up, that's good. JOLTS, job openings is down, so that's not good. ADP, non-farm payroll change, that's up. So this part is good, but I'm sure the NFP numbers were dog shit. Let me just cover it in a second. Advanced GDP quarter on quarter, down. So this is really mixed data now. I mean, USD is still fucking bullish, guys, overall. Pending home sales, massively up. Holy shit. Crude oil inventories, massively down. That means that demand is now more than the supply, which means price goes up, okay, which we have seen. When we look at oil, we see price has went up. But overall, you're really looking for sales on oil right now, right? The trend is bearish. Challenger job cuts year on year is down. Core PCE index is up. Employment cost index is down. Unemployment claims is down, which is good. Personal income month on month is up, which is good. Personal spending month on month is up, which is good. Chicago PMI down, really down. Just took a pounding. Average hourly earnings month on month is up, so people are earning more money. Non-farm payroll change 12k. That is absolutely fucking horrendous numbers. Horrendous. Unemployment rate is steady. That's the thing, though, right? You don't just base it on that and be like, "Oh, the UK, the USA is fucked." It's absolutely not. It's just very bad numbers. But you have to look at everything, right? Unemployment rate has remained the same. Sorry, it's sticky, so that's good. Final manufacturing PMI is up, but it's still bearish. ISM manufacturing PMI is down and bearish. ISM manufacturing prices is up and bullish. It's taken a massive jump. Construction spending month on month is the same, and world's total vehicle sales is up. So, I mean, overall, even though that is mixed data, right? USD for now is still strong for me. The economy is still strong, guys. I don't think you could really cut rates again with these numbers. Let's see, maybe you could, but I think we'd have to see, more coming down this week. So let's see what we've got. Factory orders. Presidential election year, so it's going to be a spicy week, guys. That's on Tuesday the 5th of November as well. Final services PMI, federal funds rate, FOMC statement, blah blah blah. Yeah, so we've got a big week next week in terms of US, right? Personally, I don't think I'd be trading it until that's over. I know I said that last week as well for NFP, but it's true, right? For my style of trading anyway. If you're a scalp trader or day trader, you crack on. But I'm the type of guy that likes to enter a trade and leave it for 3, 4, 5, 6, 7, 8 weeks. Tiny risk, and just let that fucker run for weeks for the maximum output, right? So I like all this. This is going to be a pretty turbulent week, guys. You're going to see the market fly one way, fly the next way, fly another way, fly the next way. It's going to be pretty fucking turbulent. So, be careful. USD is still strong for me. I know when we look at the previous news, it was mixed data. There was a lot of good and a lot of bad, but overall, it's still the number one economy in the world right now. Is that us? Yes, that is us, guys. So, quick recap before we have a look and see if there's any trades to take, right, on TradingView. Excuse me. Strong GBP USD. Weak AUD NZD, CAD, JPY. Neutral, CHF, and Euro. Okay. Now, let's have a look. Please let me know in the comments, is it better when I record my screen like this? And instead of recording my whole screen, because it's like my screen's literally about this size, it's like a meter long, and I know it makes it hard for the quality for you guys. So what I've done now is, instead of recording my whole screen, I've just recorded these individual tabs, and I've pulled the tabs in. So instead of my screen being a meter long, it's literally this size, right? So hopefully that works better for you guys with normal size laptops and stuff back home, all right? Let's just start from the top and work our way down. I'm on the daily time frame here. I love the daily time frame. AUD CAD, beautiful area to buy from here. Beautiful area to buy from. You can see we've already marked it up. I want to show you this. That was good that I just noticed that there. This is a nice area to buy from. Coming back down here and retesting this would be even better. However, one thing you do have to be careful with, right, is CAD is weak and AUD is pretty weak right now. There's nothing that strong about it. So it's two weak economies fundamentally, which is not good to trade. I only like to trade a strong against the weak, right? Because then you get the definitive, is it going to be buys or sells, right? Also, look right here. Look, what have we got here? Previous support, once broken, becomes the new what? Becomes the new resistance. What you may find here, guys, is this little trick people have entered, and then it's going to go fuck off, come down here, and then go, right? You need to be wary of that. Sorry, that was down here. You need to be wary of that. That could happen. So I'm going to wait. Because that's a very solid trade. If you wait until the previous support is broken and you trade from the new resistance and take it down, it's a very, very solid trading strategy, I should say. It works a lot of the time, so I'll be very cautious to take that trade. AUD CHF. It's a hard one because overall CHF is always stronger than AUD. Could you take buys from here? Yes, you could in terms of value, right? Value is very important. I'm not going to cover fucking value in this video because, I mean, that could be a 2-hour podcast on its own, right? Just explaining value. Value is very important. So what you may get is boom, boom. You may be able to make money. It's not a good trade. I would prefer for it to come up here. Bish, bash, bosh. That's actually the better trade, right? Or you're down here for a buy, down here for a buy, up to here, but that's actually the better trade for the melt. It might even just come to this area here. Okay, so you could trade it, but it's not based on value or actual fundamentals, right? It's based on area. Sorry, it's not based on fundamentals. It's based on value. I meant to say. AUD Japanese yen, you'd still be buying this, but there's no value to buy from here. Okay, there's no value. You need to wait for it to come down and retest and go, or even retest this area here. Previous resistance, once broken, becomes the new support. Boom, boom. But it's not very good value. The better trade would be if it came down here. Okay, but you would not be selling this, guys. I've marked this up. Don't enter fucking sells on this, you maniacs. AUD USD is definitely sells. As you can see, look, we've previously done it. Boom. I didn't enter it because it was NFP week. I always avoid USD pairs, but look, you can see, very good. What I'd be looking for now is I want to see this come back up, retest here, reject, and fucking melt. Then you could enter this for the sell. Euro AUD, nothing. It's too weak. I wouldn't do it. Euro CAD, it's just too rangy. Not interested yet. Euro CHF, totally dog shit. Why would you trade that if your eyes fucking work? There's no way you would trade that. Euro Japanese yen, yep, it'd be buys. You need that pullback. Previous resistance, once broken, becomes the new support, and it's above the 200 EMA on the daily. So that also is another confluence for bullish. Okay, buys. Boom, boom. And fundamentally, euro is stronger than Japanese yen, so you're looking for buys. Okay. Going to change that up because we may have something this week. Euro NZD, I ain't trading it, but you can see, look, these trades have worked out. Look, boom, 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 away it goes. I wouldn't trade it. It'd be buys, but you can't buy from here. There's no value. There's no value to buy it from you guys. You need to wait for it to pull back down and then go, okay? So there's nothing yet. You're going to wait a long time for that. Maybe 1 to 2 weeks. Pound AUD, again, for me, it's buys. You just can't buy from here because there's no value. It's like when you bought a Rolex 2 years ago, the GT fucking something master Rolex. It was like 43 grand, and now if you try and sell it now, you're only getting like 14 grand for it. Something ridiculous, right? So because of value, people were buying it when it was overvalued. If you buy this now, you're buying it from an area of overvalue. So you have to wait for it to come down. So there's no trade. And if you sell it, you're selling against fundamentals. So you're increasing your risk, even though it might happen, even though it very well could come down here, right? And you're like, oh, I made money on a sale. But you're creating a bad habit. You're making money on a very bad trade. You're going against fundamentals, and you are creating a bad habit for yourself because you've made money on a trade which has increased the likelihood of risk of going against you, and it had a reduced probability of going in your favor. So it's a high risk, low probability trade. Why would you take that? You want to take high probability, low risk trades. That's what you want to focus on. You want to focus on the money shots. All right. And the worst thing you can do is make money from a low probability, high risk trade, because then you'll take more of those type of trades, figuring, well, I made money the last time, and you're just going to fucking lose and lose and lose and lose, and you're just going to burn yourself out. You're going to spit your dummy out, and be like, "Well, trading shit. It's all a scam. I knew it was a scam." No, it's not a scam. You're a scam because you didn't follow your fucking rules. All right. With your lack of discipline, and we've all been there. I've been there, so I'm saying this. I'm having a go at you from a position of love, not a position of fucking pointing my finger at you. I've fucking been there, right? I know how shit it is. GBP CHF, yeah, it's really shit and messy. I'm not going to bother with it. Pound yen, buys all day long. I'd like to see it come down here. If I was going to buy it, right, you need to see it from this level. There's no value to buy, right? You need to see it break above, come back and retest and go, or you need to see it pull back down, reject here, and then go, right? That's what you want to see. Previous resistance, once broken, becomes the new support. Boom, boom. So this area will be your, what do you call it? Your entry area, all right? So let me just put that to green, okay? GBP NZD, again, it's buys, guys, but you ain't buying it from here, right? You've got a long time to wait before it comes away back down here to an area of value to buy from. So, or, you know, it has to break above here, come back down, retest here, and then go, okay? So there's nothing here. That's why I'm not marking it. I already know that's fucking weeks away. It might even be a month or 2 months before that becomes a trade. Pardon me, that I would be happy to take, all right? GBP USD, tricky one because both of them are doing really fucking well. All right, I'm gonna close this, take that away just to try and freshen up a little bit. That is not me drawing a stupid fucking line, by the way, to say right if it breaks that, sell. That's me just giving examples of the market trend and blah blah blah. However, we're always looking at here. You see this? I'm going to move that a second. Look at this. See the small white candle, large blue engulfing. We're looking for this to come back, retest and reject, which it doesn't. It breaks through. Once it breaks through, right, it breaks the previous resistance, now becomes the new support. Bang. Look. Boom. Away it goes. Now, this is broken through again. What you would find is it would come back down here, retest, reject, and go. Now, it hasn't done that. What's it done? It's broken beyond that. Once the previous area has been broken, comes back up, retest, rejects, and then melts. So what you're potentially looking for now is this. Bish, bash, bosh. All right? Potentially. We just need to see what happens. I wouldn't take it this week. Up to you if you want to enter small risk, 0.25%, whatever. But this is a spicy fucking week, guys, for US elections. Markets will be like that. Markets will look like a fucking heart rate monitor, right? It would just be like a lie detector test, you know what I mean? It's going to be another shit week, like last week was shitty, This is going to be another shit week, I'm telling you. So just sit back. You don't need to fucking trade every day. NZD USD, that sells all day long. You can't really sell from down here. There's no value. You really need it to come back up here, guys. It's broke down like it's already done here. It needs to come back up, retest, reject, and then melt, okay? And it could come up, retest this level here. Hold on. It could only come to here, So you have to bear that in mind as well, okay? It can come up here, or it can do this. Bish, bash, bosh, okay? So your entry is going to be here, or if it breaks below here, comes back, you could, but I don't know if I would. It's a pretty shit trade. You could do it. It's pretty shit. The best trade is if it comes here or even comes here. All right, those are the two best trades for sells. You would not be buying this. All right, do not fucking buy it. NZD CAD, I wouldn't touch it because both of them are very weak economies. So it's weak against weak. It's not worth it. This is if you enter those type of trades, you're going to be in it for fucking 2 weeks and you're up or down like 30 pips. One day you're up, next day you're down. One day you're up, next day you're down. It's just a really dog shit trade, okay? I wouldn't waste my time on it. NZD CHF, it sells all day long. There's no value to sell from here. It would have to really break down, not just one candle boom and go. It has to really break down, come back up in a week or two, and then melt, right? Or even better still, I'd prefer it to come back up, retest here, reject, and then melt. This is the best trade here, okay? There's still nothing yet. I mean, we're weeks away from that actually happening. USD CAD is fucking buys all day long, but you cannot buy from here. Look, you can't buy from here. The only way you could buy from this level is if it breaks above, comes back down, retests, rejects, and then cracks on, right? And we get some really good numbers. If fucking Trump gets in, it's going to fly. If Kamala gets in, it's going to fucking melt because she's a screamer. So we need to bear that in mind, all right? In terms of value, it's an area of value to sell from, but I wouldn't touch it. Look, you can make good money selling from areas of value, but I wouldn't touch it with a barge pole because I'm always fundamentally based, right? You're increasing the probabilities of it going, of it, your risk being higher, sorry, you're increasing your risk and lowering your probabilities of it being a successful trade, okay? You don't want that. You want to increase your probabilities of making money and decrease the fucking risk, okay? USD Japanese yen, again, it's buys, guys, but you just can't buy it from here. It's too, there's no value. You need to wait for it to come back down and retest these zones here. Potentially here, comes back down, retest, boom, and away it goes. Let me just make that. Oh, come on. Why is it not letting me make that green? There we go. So that's really, I've marked this up just to show you what the market's going to do. I didn't mark this up for you to take sales, right? Obviously, if you're a scalp trader, fucking fill your boots, but not for swing trading. This might absolutely melt, by the way, and don't look back at this video and be like, "Oh, he said that's buys, and now it's absolutely melting." You need context, right? You need to then say, "Well, why is it melting?" Because the Bank of Japan and the government have been saying for the last fucking 6 weeks they have to intervene because the currency's so shit. So what will happen is this right here. That wasn't because the Japanese economy was better than the American. This big massive melt was because the Bank of Japan intervened with bonds and money and blah blah blah, and that's what made it fucking melt, right? So it's a fake melt, it's not a real melt. You just ignore that. You can trade it if you want, but I just ignore it and I prefer to enter down here, blah blah blah. So if this starts melting, I'm just ignoring it, waiting for the rejection around here, and then crack on, okay? USD CHF, yeah, it's shit. I know I marked this up, and it has went. Look, if you copied that a couple of weeks ago, you could have made some good money there. So if you did copy that and you took the trade, well done. I didn't take it. It's not my cup of tea. Let's have a look at the US dollar index. So we are at a vital area. It's either going to break through, boom, and go, or it's going to melt from here. You know, potentially going to go up. But like I said, spicy fucking week for USD. So just be very careful. All right. Let's jump into oil quickly and let's get this video fucking done and dusted. Because I am bloody knackered. Yeah, we saw this, by the way. Look, we actually saw this in our group because I do all my trading live, right? In our Discord group. We saw this. We could have entered this, guys, and I just said, look, here it is. Like, here's a small blue candle, large engulfing. You mark up the zone, come across, boom. Retest rejects in that zone, right? This is different because I marked it up in a daily, but it's the same thing, right? It's the same idea. We could have entered this, guys, and I told them, guys, I'm not interested in that. It's just a big fucking mess right now, right? What we really want from oil, fundamentally, oil is sells, right? Fundamentally, it sells. The only thing potentially making it buys is the whole Iran and Israel war. For the price of oil to fly, based on that, Israel needs to hit Iranian oil facilities, right? That's what will make oil fly. This here, this big gap, is when Israel hit Iran, but just last week, but they did not hit oil facilities, so the price of oil fucking melted. Now, what also makes oil sells fundamentally, very important to understand, is that right now, although we just saw the news and demand is a little bit more over for last week, overall, the supply is far more than demand. Last year, China was responsible for 70% of all oil purchased in the world, right? This year, they've only purchased 20 fucking percent of that. 20%. So there's a 50% fucking excess of oil, which no fucker can fill, right? Who the fuck's gonna take that from China? Nobody. And next year is also forecasted that China will only be responsible for buying 20% of fuel as well. So you need to be aware of that, guys, okay? Things change. Yes, and Chinese numbers are starting to very slowly come up now, so things change, right? If the manufacturing starts to increase rapidly and starts becoming, well, of course they're going to purchase more oil, blah, 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 more fuel and all this kind of stuff. So bear that in mind, but that's the reason why. If you're like, well, how do you know oil sells? This is the reason why, okay? Gold. I mean, you don't even know gold. We don't even need gold, you know. What I would love to see, yeah, I'd love to see gold coming back down, retesting this bad boy. And of course, I would be buying it. Bosh, you know, it'd be beautiful. Right in line with the 200 EMA. Boom, bish, bash, bosh. Now it may not do that. It may only come down to here. You know, that is possible. So let's wait and see. Silver. I've been waiting for ages. Here we go. Silver's in a really beautiful fucking zone for me. Previous resistance, once broken, becomes the what? The new support. Bish, bash, bosh. So I will be looking for buys on silver. Copper, still really shitty. Let's look in the daily so it's a bit clearer. Yeah, it's shit. Look, that is a piece of shit. So what we want is we want it to come back. Let's see this small candle, large blue engulfing. Once broken, becomes the new support. So I really want to see copper come down here, retest deeper, midway this 200 EMA, and then fly. Okay, we've got a long way. It could be, that's been an entire week. So yeah, we've got a long way to go. Indices. This will be a spicy. I actually done a couple of scalps on these last week and caught some decent moves. Yeah, I'll be looking for buys around here or around here even better. Let's see what happens. Preferably here could be a buy. Yeah, same again. Look, boom. Once broken becomes the what? Area of support. Bish, bash, bosh. And then again, this down here is still a good area. Okay. This is still a decent area. And the 200 EMA is down here, so we need to be careful, right? This could very well come down here. Boom, retest, reject, and go. Like this. See that? Look. Boom. Beautiful. But it could also be like this, where it doesn't come down. So you have to bear all that in mind, okay? You just have to work on price action. Don't try to guess what the market's going to do. Just come up with potential areas of value, blah, 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 that it could come to. And then watch it, right? React to it. React to what the market does. Yeah, nothing else there, guys. Right, same old shit. So yeah, let's see. Come on. Okay, that's it, guys. All right. I'm Ryan Mack. This is the Trading Guys. If you would like to come and join our Discord, we have full education videos. We have scalp trades, which is done by my business partner Lee. I'm a swing trader, heavily fundamental. He's a price action guy. He doesn't do fundamentals whatsoever. He just gets in 10, 20 pips and out, you know. They do well. They do very well. Guys get signals every other day, or setups, I should say, every other day. And what else? Yeah, we give you, to put our money where our mouth is, guys, we give you a full month absolutely free. Okay, absolutely free. So come and check us out. If you want to check out the free month and you don't like it and you want to leave, you just leave. Don't have to pay anything. Okay, you will get a link down here below. I'm Ryan Mack. I'll see you soon.